the best investors in the world don't look for like the home run hit. They look for compounding results year over year.
GM, good morning. Welcome to Milk Road Radio, the easiest path to get smarter about crypto. I'm your host, Jay Hamilton, and today we're doing something special. Last week, Milk Road Pro members had exclusive access to an AMA. They got to ask anything to our Milk Road team. Now, this AMA was so full of alpha, we decided to release it for free to you as today's podcast episode. This episode is going to give you the inside edge on making life-changing money from your crypto investments in the next 12 months. You're about to hear Kyle and Martin, our brilliant heads of research, answer 30 of the most important questions from crypto investors just like you. In today's episode, they'll answer questions like, everyone knows that BTC, ETH, Sol, and Avalanche are great L1s, but who's the next L1 to be paying attention to? Which is the better investment, Solana or Jupiter? And can Jupiter's token JUPE 10x? Will Solana or DOGE be the next ETF? How to properly invest with dollar cost averaging strategies. And finally, what are our exit strategies and how to survive the next bear market? Trust me, these insights shared here are pure gold, and we couldn't keep them to ourselves. Now, you could have gotten this alpha a week ago. If you're serious about making money in this cycle, then you know how fast prices move and how big a difference a week makes. So after listening to this episode, you might want to sign up for Milk Road Pro so you can attend the next AMA, ask your questions, and make sure you're investing like a pro. Hit the link in the show notes to sign up now. Now, today's episode is raw. It's unfiltered recording. It's straight from the Milk Road Discord with over 50 pro members chiming in live. You might hear some side convos and Kyle battling it out with the chat, but it's all part of the fun. Without further ado, let's hear the AMA from Milk Road Pro members.
Staking and yield strategies. There's been a few questions there. Overall investment strategies and market insights. A lot of stuff around the ETH ETF. A bunch of things around specific projects. So we'll definitely do some analysis there. A lot of things around market trends, economic stuff, and some regulatory stuff too. So we'll make sure to cover it all. It looks like everyone's gratitude so far is this. So that's really nice. I'm grateful that this morning I got up at 5:30 in the morning and surfed for an hour and a half. All right, Martin, I'm sure more people are going to come in, but should we get started? What do you think?
Yeah, let's get into it.
Sweet. By the way, Martin is one of our lead writers for Milk Road Pro. So he does a lot of the research along with myself and a few other members of the team. He's going to be joining me on these AMAs on a monthly basis as well. He brings a lot of in-depth insight and covers a lot of areas that I don't necessarily cover. So he will jump in to answer some questions that I might not have good answers for. Okay, let's get into it. Before we get started, one thing I'm going to say is there's a lot of questions about portfolio management, portfolio structure, should you hold this asset, et cetera. We did a bit of an announcement in the announcements channel here in Pro. Tomorrow, the Milk Road Pro portfolio launches and is live for all of you guys to see. This is our entire portfolio, what exactly we invest in, the allocation percentages, why we're investing in each asset, the amounts that we're investing, and then also on an ongoing basis, we'll update it with any trades and anything that when we change. If we move a bunch of ETH into Solana, if we are staking, if we're trying to farm some airdrops, whatever, all that is going to be live for you guys to see tomorrow. So when I start to answer some of these questions today, I probably will just refer back to that and be like, hey, just check out the portfolio tomorrow. It's going to be much easier and you guys will have everything you need there. So that's super exciting. We can't wait to share that with all of you. That will be live, as I said, tomorrow. You'll see that. It's for pro members only. So you'll have to just be logged into the site and then you'll be able to see it. There's a dashboard that is actually you can interact with and you can click around and see a bunch of things. So it's really, really cool. We're super excited for that. So look forward to that coming your way tomorrow. Milk Road Telegram trading bot. It's not, I guess it's kind of that. It's not a Telegram trading bot. We will update it on an ongoing basis, but you won't get notifications. Where you'll get the notifications is actually here in Discord in the Pro Team Signals channel. So whenever we are making a trade, before it even shows up on the portfolio, it will go in here in Discord. So make sure you're paying attention to that. Also on Thursdays in the free newsletter, we will do a weekly update on any changes we've made to the portfolio. So lots of spots where you'll be able to see what's going on. Okay, let's get started. The first question is about the ETF. So obviously the big news of the last couple of weeks is the ETH ETF getting approved in the US. The question from Suga M027. With ETH ETF, do you still see Solana with the best risk reward ratio, or would that be ETH now? Also, I've had a small bag of Wormhole token. Do you see any upside to that this cycle, or any way I can use it to earn yield or airdrops? Many thanks. Great question. So obviously the ETH ETF is super bullish for ETH. But we've been a mega bull on ETH for a long, long time now. I think really what this ETF does is it switches the ETH Bitcoin ratio, and I think ETH now starts to outperform Bitcoin. But I think ultimately, and obviously the flows, just like we saw with Bitcoin, are hopefully going to be big and solid with Ethereum as well. I don't think it's going to matter. I think Solana is still going to outperform. Maybe there's a month or two here as they go live where ETH, catches a narrative and becomes limelight, and maybe it outperforms on a month basis or a 2-month basis. I'm not exactly clear on how that's going to go. Solana is just valued at 5x less than Ethereum, if not even more. And it has, PayPal's building on it, Visa's building on it, Stripe is building on it. And I think this ETH ETF approval is just as bullish for Solana. This was just a signal to the world or to the US that, hey, we're okay with smart contract platforms. We're going to allow this new decentralized ecosystem to exist on the internet. And we're going to give a pipeline for people to be able to invest in it. And so Solana won't get those flows, but I think enough people will still be moving on chain and moving over Solana because it is the next best, if not the best chain for smart contract platforms. So it hasn't changed my thesis around Solana at all. If anything, I think it helps to build on that thesis. Probably the next ETF will be Solana. Will that be soon? Probably not. But honestly, right now, we don't really know. Obviously, the regulators in the US have done a complete 180 over the last 2 weeks. So no one really knows what's going to happen. But I would imagine whenever the next ETF comes, it will be a Solana one. But I still think we are months, if not years, out from that. But either way, ETH maybe outperforms as those flows come in when it launches, but I think Solana continues to outperform overall this cycle. In terms of Wormhole, I sold that the moment I got that airdrop, and thankfully, because it's down 60% since then, I don't really see strong upside to the Wormhole token. Now, to be fair, I haven't done a full analysis on it. I just don't think it's super interesting this cycle. I don't see a reason to hold the token. I don't see any demand for it. So I don't have a lot of advice on what to do with it other than probably sell it. This actually in the chat is a good point. John C. DOGE is the next ETF, in my opinion. I actually think there's some truth to this. Obviously, Bitcoin and ETH were the ones that the SEC can approve and say that there are more commodities. It's harder to do that with basically any other token in the space, except for meme coins, something like DOGE, which is just this decentralized thing that exists. It has no purpose. There's no team around it. And so it could be an easy one to approve, to be completely honest. And so I could imagine that someone launches this thing and it would be easy for it to do. It'd be hilarious, but I do think it could happen. Okay, is it worthwhile to make a heavy investment in Bitcoin, ETH, and Sol in this cycle, or should I wait for the next? This is from Nico or Pico 12152. So you'll see from our portfolio tomorrow, we are most heavily invested in ETH and Sol. We actually don't have any Bitcoin in our portfolio that we'll be putting out tomorrow, which was a debate amongst our team for a while there. But we think at this point in the cycle, ETH and Sol now take off and they dominate, and Bitcoin dominance goes down. We have a pro report on Saturday coming out, which will explain our thesis around our entire portfolio. So I dive into details on that. But yeah, we've moved all of our Bitcoin into ETH and Sol and continued to buy in dollar cost average into ETH and Sol. I think there's still plenty of room left this cycle. ETH's not even at all-time highs, neither is Solana. Still plenty of room there. And I think they go way past all-time highs. ETH above 10K probably. Sol, who knows, could reach, if it does what ETH did in its second cycle, it could reach 1,000. So I think there's plenty of room left, and the risk is very limited on those. You could obviously go down the risk curve and try for more high-risk altcoins, but I think it's crazy to not be exposed to ETH and Sol right now, considering where they're at. And I think we still have about 12 to 18 months left in this cycle. So plenty of room there. When investing or dollar cost averaging Bitcoin, ETH, and Sol, what specific short-term things do you look at on charts or elsewhere to decide the moment to buy in that specific moment? Great question. So the key thing I would say is if people are euphoric and they're super bullish and everyone's talking about that asset in that moment, it's not the time to buy. You want to buy the asset when people are most scared to buy it. So the last 2 months have been a great time to buy ETH and Sol. Everyone was like, oh, macro's getting bad. Maybe we've topped out. That's when you buy. You didn't want to buy in January, February, March when everyone was super stoked on Bitcoin, super stoked on crypto. And I had been saying on the podcast a bunch, I was like, I kept calling a pullback. It didn't happen for probably a month after I originally called it. But I had stopped buying at that point because when people are getting too excited, there's all these things popping off and everyone's going nuts on Twitter. It generally means the pullback is coming at some point. You don't even need to look at charts. You can just literally look at how crazy people are getting on Twitter. You can look at the fear and greed index. If it's getting super greedy, maybe you wait. But to be honest, the easiest thing is just dollar cost average every month, the same time, and you're fine. If you want to get cute and try to time it, yeah, you can look at charts, but you need to understand TA. I can't teach that here on this call. But more than anything, just look at the sentiment of people in the space. And if people are getting too crazy, if we've been going up, it's probably time for you to hold off for a second and wait for things to get a little bit more grim and wait for that pullback. It's more of a gut feeling than anything and just like understanding the market sentiment. And that was Proper Chelsea who asked that question. So thank you. Here we go. In case we make profits in this bull run, do you recommend to swap it into stable coins, put it into Bitcoin, or put it into fiat? Really good question, and also a topic of conversation for our team the other day. If you're taking profits, which not everyone has to, it can be difficult to decide when to take profits. I do recommend you take some profits no matter what. It doesn't need to be your whole portfolio. And actually, I recommend it's not your whole portfolio. I would recommend a certain percent, whatever that is. If it's 20%, 30, 40, 50, it's up to you. Depends on what you need this money for. But again, in terms of taking profits, if you're just taking profits, but you're going to keep it in your investing portfolio, if it's at the end of the cycle, I'd put it into stables, and then you can use those stable coins to generate yield through the bear market, whether that's using Ethena or MakerDAO or something else. So that's probably my recommendation. If you were going to hold any asset through the bear market, it should be Bitcoin or ETH. I don't even think Sol is going to be the one you want to hold, even though I consider a major at this point. Although maybe Coinbase would be another one you could hold through the cycle. But without a doubt, when the bear market comes, even those are going to go down probably at least 50%. And so do you want to stomach that? I don't know. For me, it's hard to be completely out of crypto because you just never know. Are we going to have another big bear market like we've had, or are we going to be like the super cycle? And so I don't want to be, I think I'd be more stressed if I held no crypto, to be honest. And so I keep a large bag and will continue to do that, but I will move I will hold no altcoins, absolutely zero. I think there's no point in ever holding any of those in a bear market. And even Sol, I'll probably sell or move most into stables or ETH. So, but again, we'll have to see what happens, right? I think we're 12 to 18 months, and then who knows what the ecosystem looks like at that point. Maybe there are some good opportunities throughout the bear because DeFi is bigger and better. We'll have to kind of see where things go. But at least that was the play last cycle, and currently looks like it'll be the same play this cycle. But we'll have to see. But great question. The next one is on JUPE. Martin, I'll let you take this one away. So this comes from 0x16 Zelen. You guys got tough names on Discord. This one is, you mentioned JUPE, which is the token for Jupiter, by the way. It might get a higher return than Solana. Would it mean it would make a 10 to 20x? And also, should we focus on investing in JUPE rather than Solana?
How to approach this? I would say JUPE is kind of go-to platform for Solana. So whoever is using Solana, there's a high chance that that person have already used Jupiter. And I think that some people who will come maybe a little bit later in the cycle, they will want to have some exposure to Solana, and they will feel like, okay, the Sol trade is already over. So what's the other way how I can get exposure to Solana being successful? And I think Jupiter or Jito are the best place to how to kind of get exposure to Solana if people don't want direct exposure to Sol token.
Yeah, it's the beta play, but what's the FTV of Jupiter right now? It is 11 billion. So do we think it 10 to 20x's? That would mean, for those that are asking these questions, the easiest thing you can do is just look at the fully diluted valuation. Don't look at market cap and be like, okay, what would a 10 to 20x mean? That would mean that the FTV of Jupiter would be 111 billion or 222 billion, which would be just, I don't know. We've never had any app on chain be even remotely close to that big in terms of market size. So I would say no, it doesn't 10 to 20x, but it probably outperforms Solana. I think that's what Martin has said as well. And I think the other reason that Martin was so bullish on Jupiter is it has all the users. And so they've just launched a liquid staking token as well. So it has a new form of revenue stream potentially, or a new form of acquiring users. So they can sort of become the big DeFi application on Solana. And so I think it definitely outperforms Solana, but I would still hold Solana. Like I said earlier, it's crazy to not hold Solana and ETH because those are just the two like least riskiest, highest reward investments. Yes, JUPE could do well, but it also like maybe some other exchange does really well. Uniswap launches over on Solana and does really well. Like there's more unknowns in a protocol like Jupiter, which just launched its token. It also only has like less than 10% of its supply available, which means there's going to be a bunch of unlocks, whereas Solana doesn't have that as much and ETH doesn't have that at all. So I would definitely say you don't want to only hold this as your exposure to Solana. You'd still want to hold Sol. Would you agree with that, Martin?
Yeah, I would say like JUPE at this point is still not like fundamental play. It's more of a like there's gonna be hype about Solana if Solana is successful, and we expect it's gonna be successful, and a lot of users are gonna use, and that's why we think that JUPE could perform well. Also, like it started as a DEX aggregator, but right now they have already built in-house perpetuals as well, because perpetuals it's just very huge market. So obviously, it can bring more revenue to the protocol. And basically, once you have users, you can build everything in-house and just provide them with your own products and charge the fees. And you don't need to like direct them to other external providers or protocols. So that's why JUPE is quite interesting, and we think that it could be a good play, Solana.
By the way, Martin is more bullish on JUPE. I'm actually, if you want to beta play on Solana, I'm more bullish on Jito, which its FTV is 3.8 billion right now. So potential for more room to run. Doesn't have as much built out as Jupiter does, but does have some it dominates in the liquid staking market, and it could do the same thing as Jupiter, start to build out other protocols, other use cases. It has the users and it has the liquidity. So I'm actually more bullish on Jito. We should put a bet on that one day, Martin.
The valuation is on your side, so yeah. But
right, so you get better odds.
To be honest, I'm holding some JUPE and I'm voting with it, and I expect a huge airdrop coming my way because I'm active voter. So
right, that's a good point. Jupiter has more that they're going to airdrop. I don't think Jito does, but don't quote me on that. All right, let's move on. We got a lot of questions. This question actually is from Dan Wee. A lot of E's in there. Curious to know how I should allocate myself this bull run, more Bitcoin or more ETH or more Sol or more meme coin. I'm actually just going to defer that to check out our portfolio tomorrow, and you'll see it is more ETH and Sol. And we do have one meme coin in there and absolutely no Bitcoin. But that doesn't mean you have to do it that way, right? You have your own risk. So it's up to you. This was a great question. Which new project this cycle will have success like Avax and Sol from the previous cycle? Also, which old coins from the previous cycle are dead, like XRP? And then another one is CRO, which is Crypto.com's token, considered a good investment this cycle? This is from WizD8007. Which project this cycle will have success like Avax and Sol? One, I think Sol has success again. I'm a lot more bullish on Solana than Avax. But what I think they're looking for is Avax and Sol did like a 100x at least last cycle. The one thing I would say is you're probably already too late to get the returns that we got with Avax and Sol last cycle, because to get that 100x like they had, or whatever it was, I don't know if it's actually 100x, but you needed to buy in the like low of the bear market to get that, and we're already halfway through the bull. So you won't get returns like that. You could have if you bought like Tau or Render, which were some of the AI plays that have just done, I don't know, insane amounts already this cycle, and they'll probably still continue to do well. Those are probably the ones that are going to do it this cycle. I don't know that there's many other L1s that might do it. There are like Sui and Aptos, but they're already around like 10 billion, I think, or higher FDV. So Avax and Sol came from way smaller. So I don't know that opportunity exists this cycle as it did last cycle, because last cycle it was like there was only Ethereum. Everything else was kind of shit for blockchains. And then we had like Solana and Avax and all those come along and all launch around the same time, at the same time that Ethereum was like just maxed out. And so that setup was just so perfect. And we don't have that this time because there's Ethereum plus all of its L2s. It's like we don't have that moment of like, we can't use this chain anymore. And that's the only chain that everyone uses. And so we must use these new things. We have good solutions with L2s. We have good solutions with Solana. And so like the other Gen 2 L1s don't have that like setup like they did last cycle. So it's probably not in the blockchain world, L1 tokens. It's probably some sort of app. And to guess that is, I don't know, it's extremely hard. Which old coins from previous cycles are dead, like XRP? Oh God, Cardano, XRP. What else? I don't know. There's so many. Most, to be honest, most of them are really bad. I'll tell you which one is the best token that is an old one. That's Maker, which is obviously is a big part of our portfolio. You'll see tomorrow. From the old tokens, I think that's the one that's most alive. But I'm not going to get into all the dead ones because it's basically all of them. Is CRO considered a good investment? I don't know. I don't see a reason to hold it. It's a centralized blockchain run by a centralized company. I see no reason why it does well. Martin, you have anything to add to those?
I would add that the previous cycle, there were not many tokens or projects which were investable, meaning like everything was built just around marketing and hype, and there weren't any data or like anything really how you could reason yourself to kind of get that investment. But this cycle is different. There are many projects who are generating money. There are also layer ones who have tons of users. There is a huge activity, MEV, like those are the things that didn't exist basically in previous cycle, but now they do. And if you aim to make like 20 times more money than like 20x, then you probably should try something else, because we don't think that with our approach, we are going to make like 20x in the next 2 years. That's not going to happen. Like it's always the game of risk versus reward. And we now see that Ethereum, Solana, Maker, these projects are valued at some point because they have already reached some product market fit, they have users, they have revenue. These all, like, if you put all these things together, like these assets will not outperform meme coins or some other small altcoins, but they will still do well because they are basically adjusted from that risk which you are exposing to. So,
which brings up two good points. If you wanted the token that's going to perform like Sol and Avax last cycle, that was Dog Whiff Hat, and you needed to buy that thing way before having a hat was cool. And I don't know that we're going to get another one that, but obviously you can still get them in other meme coins, but it's all gambling there.
Crypto will go up more than 100x in both users and value over the next decade. If you're listening to this right now, you're extremely early and have an incredible opportunity to capitalize. At Milk Road, our mission is to make you smarter about crypto. That's why we're doing today's podcast and why we send you a daily newsletter for free. But if you're ready to level up as an investor, then let me tell you about Milk Road Pro. We crafted this resource for investors who are already smart enough about crypto and are looking for more actionable insights on how to invest successfully in one of the fastest growing industries on earth. Every week, we break down the latest trends, dive into tokenomics of popular and up-and-coming tokens, and get into the nitty-gritty of market analysis, all to help you invest smarter. Plus, we have a private Discord community for pro members. It's like your backstage pass to the Milk Road crew, exclusive insights, hot tips, and live AMAs with our team. Now, if you're looking to level up as an investor, then click the link in the show notes below and sign up to Pro today. Don't let this bull market opportunity slip through your fingers.
The other thing I would say on this is, as Martin said, like to try to get a 20x at this point in the cycle is probably pretty tough. I'm not saying it can't happen, but it's definitely not easy at this point. And I wrote this whole section you'll see on Saturday's Pro Report talking about the best investors in the world don't look for like the home run hit where they're going to get this like 1000x. They look for compounding results year over year that are really, really good results, and they don't lose a lot of money on a yearly basis. That's the key. And so buying something like ETH or Sol, it's going to 5x in the next year or 10x in the next year, and being okay with that, and then just compounding that on a year over year over year basis, that's how you build real wealth. Warren Buffett, George Soros, like every big successful investor that you've ever heard of that has written a book or that you've seen, they all have this same thing in common. They all had different things that they invested in, but they just did it for freaking like 50, 60, 70 years, and they did well every single year. That's how you build real wealth. You can go play in meme coins and hope that you get a 100x. It's like going to Vegas, right? How many people do you know that built real wealth going to Vegas? Not many. Okay, this is a great question. Assuming we're in a continued bull market, we should expect, oh, what happened here? Where'd it go? We should expect at least a few more retracements. What do you think people should be doing to hedge during those retracements? I've been thinking of going short in the perps markets just in case. Do you agree? Should we be putting these hedges into place now? I don't think you need to hedge on these retracements as long as you're investing for like a little bit more long term. Whether it's like if you're investing and you're day trading, you're not investing, you're day trading. If you're day trading, sure, you can do these kind of things. That's not what I teach. I don't do that. I'm investing for the cycle and for the long term. So I'm trying to make the most I can for this cycle, which is, 12, 18-month time frame, and then setting myself up for a coming bear market and then preparing for the next big cycle. These like more longer, bigger opportunities. So these 20, 30% pullbacks that we get, for those of you that are new, we get 10 to 12 of them every single cycle. We've already had 5 of them in this current bull market. I don't hedge them. I definitely wouldn't go short, not in this market. I think it's crazy to go short in crypto. I get it. You can hedge and it could help, but for me, I'm not that active that I care about shorting. These pullbacks tend to last like 5 to 50 days. And so do I really need to hedge on something like that? Like not really. If anything, I'll just buy during those pullbacks and that's it. I don't actually hedge them. I don't try to short. I think most people here probably listening don't do that either. If you can do it, go for it. But trying to time when these pullbacks happen and how long they happen for is it's so difficult. I instead look for when is the big pullback coming, the bear market. That's what I'm more focused on. And other than that, I'm accumulating until that moment. And I'm near that moment, I'm starting to dollar cost average out and take my profits. So a bit of a different strategy. Martin, there's these questions on AOIZ and Sol Layer. Do you know anything about these? Do you want to comment on them or should we just skip these?
I have no idea.
Okay, me neither. Yeah, sometimes people ask questions about small tokens that I don't know much about, so we just sort of skip those.
Maybe I just want to add something to your last comment.
Sure.
I think the playbook is done. I think we have window 2 or 3 more months before Ethereum ETF is going to be traded on exchanges. And I think until up to this point, everyone should be fully allocated, not stables. Most of the stable coins or the money you are able to and willing to invest in crypto should be allocated by then. And then we will probably have 12, 18 months before the market get all the people and interest. And then we also try to I don't want to say time, because if you are trying to time the top, it's impossible. You will never be successful doing it. But we are gonna to monitor all the metrics, which will give us idea where we are at the cycle. And once we think that we are close to the cycle, we will share some ideas and probably will share some report that, hey guys, here are the data. We think we are close to the top. So start to DCA out. And it's not gonna be hey, sell everything. But you can start to just DCA out, start, 5% in the first month, then 5% second month, and you will slowly start to DCAing out, and it will help you to capture some of the gains you were able to get during this period. So the playbook is pretty clear. Is anyone is trying to overcomplicate it by also profit from the small pullbacks? There is 99% that you will lose more money than you'll get. So
zoom out and think about the cycles and play the cycle, not these interim moments of pump and dumps. That is just a recipe for disaster. But if you can play the cycle, even if you don't time it perfectly, you can still do really, really, really well. So that's the key. That's the play. All right, let's move on to staking and yield strategies. So the question here from Aljosa 1192. Don't you think that staking and restaking are a bit too emphasized when speaking about retail crypto? When the retail clicks in, most of them will just buy whatever is listed on top exchanges and won't bother going into technical details like restaking, at least a larger percentage of them. I believe that's because most of them will want to make big money and won't look for the 4 to 12% returns. What do you think? Why do you think it'll play such a huge part? Hopefully you answer it. Thanks. Martin, you want me to start this one or do you want to start?
You can start.
Okay. So the reason we have been talking a lot about staking and restaking, we've done a bunch of pro reports on them recently, is because one, there's a lot of money to be made there in terms of not just the 4 to 12% returns of staking the yield, but in terms of earning airdrop, in terms of the tokens that represent these companies, whether that be Lido or Eigen, et cetera. And so they're investable. And it is an industry that has obvious product market fit. It is an industry or a use case, let's call it, that has a lot of revenues, a lot of value creation from it. It's real revenues too. These aren't hype cycle type revenues, let's say a Friendtech or a Fantasy Top. These are revenues that will exist both now and during the bear market. And I think the big thing is, retail probably won't stake or restake. Don't really care about that. I care about institutions. As regulatory changes, as institutions come in, they love yield. And I think they are going to be obsessed with staking and eventually restaking. And so I think a lot of capital will flow into this space in terms of both staking and eventually restaking. Restaking will probably take a bit longer, but I think there will be a lot of liquidity that comes into this. It won't be retail driven. That capital will come from institutions. And you can already see it with some of these ETFs, people talking about, man, I wish there was staking. I think there is ETH staking in the UK ETF. And so a bunch of those institutions are already able to do it. And again, institutions love yield, especially when it's real yield that's transparent that you can watch and see on chain. I think they're going to be all over this. Regulation has been the reason that they haven't been able to come in, but obviously that's getting cleared up. So I could see this continuing to be a big narrative into the future. Anything you would add, Martin?
Yeah, I agree. And I think there is going to be demand for kind of liquid staking and liquid restaking tokens. And simply because the yield, even though you said it's just 4%, it's still yield. And like, imagine how big is the stocks who pays dividends. And there are people who just buy these stocks and nothing else. They don't care about the growth. They just, concentrate and focus on dividends, stocks with dividends. So this is the same case. Like those people probably have different risk kind of tolerance, but they understand the risk reward again. So, you won't do 20x, but you will have, I don't want to say stable assets because Sol and ETH and Bitcoin and all these things will still be volatile for a while, but less volatile than everything else. And if you can get some additional yield on top of it, I think most investors will just love it. Like, with our latest report about liquid staking on Solana, that's if you don't liquid stake, you are diluted. So we think there's going to be huge demand for liquid staking tokens. And even though that yield doesn't seem to be that high and attractive, I believe that for like serious investors, it's pretty compelling.
Yeah. And someone just said, but there's also the risk of hacking the protocol and losing all the money. This should be highlighted as well on yield-based tokens. This is true of like DeFi protocols, but when you're talking about like liquid staking, something like Lido or running your own validator to stake, the risk is very, very minimal. And if something did go wrong with the whole staking like aspect of, let's say, Ethereum would be done, right? So like, it's not like you're adding more risk by staking. You're just getting your 4% with really no additional risk. It's kind of like a risk-free yield. It's kind of like when you put your US dollars into a treasury. Yeah, treasuries could blow up. But ultimately, if the US treasury blew up, then the whole US dollar would be worth nothing and the whole US economy would be crushed, right? So like, is there really additional risk in holding a treasury versus the US dollar? Not much, because they both would be gone either way. Same kind of thing with Ethereum, not so much with Solana yet, because a lot of those liquid staking protocols are very new. So I do agree on the risk there. Less if you're running your own validator or you're in something like Lido. I'm speaking with Ethena. Yeah, Ethena and all that. There's many other very risky parts of yield, but that's not what we're talking about. We're talking specifically about staking. And specifically, actually, just one more thing on this. Liquid staking on Solana, I think, is one of the best opportunities right now. And that's why I'm so bullish on Jito. That's why Martin's so bullish on JUPE. And Sanctum has their points program. Everyone should be farming that one right now. Someone actually asked, the next question is about a guide for staking ETH and Sol. If you look at our pro reports, we kind of explain how to do it and where to do it there. And we have links that take you directly to the app. So if you need to know that, just look at our pro reports on Ethereum and on Sol. There's also an airdrop guide, milkroad.com/airdrop, I think is what it's called. Cool. Okay, some project-specific analysis. What is your take on Cardano? Why does every AMA we've done so far, someone asks about Cardano? What price could it reach, as it's been quite slow lately? Does it make sense to consider it within our portfolios? I do not consider Cardano at all in my portfolio. It is one of those old, useless tokens, in my opinion. I don't think the team is good. I don't think the technology is good. I think that they have been promising the world for many, many, many years. Cardano's been around since like 2017, and it like just got smart contracts and still has no developer community. I don't know why people still talk about Cardano. It's one of those things where it's like, to me, it's dead, but people continue to hold on to it because, I don't know, maybe they made some money on it 2 cycles ago. Pretty useless in my opinion. That's my
We should
nice
learn
take.
from them because their community is huge and they are still around and like they just don't deliver.
Yeah, true. I don't know how they've done that. Charles must do something to build his community. I also think a lot of it is bots on Twitter, to be completely honest. So I don't know. I stay away from it. There is another question here asking about other OG coins like Litecoin, Cardano, XRP, TRX. TRX, that's Tron's token, right? That's one that is interesting if you're looking at OG tokens. Tron has actually got product market fit with stablecoins. Obviously, a lot of competition though with TON, with ETH and L2s, with Solana. So I don't own it. I don't hold it in my portfolio, but like it is one blockchain that's actually generating a hell of a lot of revenues. It has some fundamentally strong components to it, but I don't know. I don't know enough about it, so I don't buy it. But I would say there's definitely something there with Tron. Out of any of the OG ones, that's the one I would say. Let's see what else. This is from Arasu 1980. This cycle seems to be quite muted. There's a lot of talk about we are still very early across the industry, but as a user, it feels very jittery. Is this cycle done? At this point, I'm just holding my bag for the long run and probably will only sell some minimal coins if the price is right and dispose some of the smaller ones. May end of riding the wave down at the end of the cycle. I don't know that I would say this cycle's been muted. It's been pretty wild. We've had the AI craze. We've had DeepIn. We've had, obviously meme coins. Solana has just blown people's faces off. If you got into it, last year, I'd say it's been we've had Bitcoin ETFs and Bitcoin's been wild. We now have an ETH ETF. So I would say I don't know that it's been muted. I think people continue to remember the 2021 cycle and they forget that 2022 was also a really good year. That was part of the bull market and Bitcoin did really well. Some of the majors did well. And then 2021 is where we had the rip face, like melt, what do you call it? Like face melting, like rip. And we're not at that phase of the bull market yet. That's what's coming. When Martin said, I think there's like a 2-3 month window left. After that window and why he said everyone should be fully allocated, that's when we have the craziness ensue, the 2021. We're not there yet, but people keep thinking that this year is the 2021. I don't think that it is. So I wouldn't say it's muted. I think we've had an amazing last year. There's been, Bitcoin has gone up multiples. It's past all-time highs. Solana's like, I don't know, a 10x or whatever or more since its lows. And are we at the top of the cycle? Is the cycle done? Like, I think it's just getting started basically. And as we've said multiple times, we think 12 to 18 months left. We just got the ETH ETF approved. Interest rates are still high. Liquidity is still not pumping yet, but it's coming. I think there's still plenty of time left. Anything else you want to add on that one, Martin?
I just want to say, Raoul Pal, his favorite kind of phrase is, don't fuck it up. And it basically means that the people capitalize on crypto is pretty easy. But in reality, people just see all meme coins and all people on Twitter doing, 50x, and they try to do the same thing. But you don't see all other people, like 99% of other people who are losing money constantly trading meme coins or doing some other shit. So this is a generational opportunity and you just need some reasonable way how to approach it. And This is what we want to provide you and give you some guidance with our Milk Road portfolio, because we think this is the smart way how to get, proper exposure to crypto. So just don't fuck it up.
And to be fair, actually, when I look at the list of questions from our Milk Road audience, there wasn't a lot of what's the next big meme coin? What's the next, big whatever shit coin? There's a few people still focused on those old OG zombie coins. But other than that, it's been actually really good questions about fundamentals, about the good major projects, about the big use cases. That's the kind of stuff you want to be thinking through. And so kudos to everyone in here that's been asking a lot of the right questions. Okay, we'll do the Ethena one second. I have one question that I want to read first because this is a good one. This is from Beth Heaton Grindle. For someone just starting out, I'm still mystified that crypto is a thing. Wrapping my head around the idea that anyone can make a currency for people to buy or earn by mining that basically makes value based on popularity is some kind of jetpack future stuff that my tiny 1987 brain cells can't fathom. Hell of a great question. My question is, do you think crypto, not specific to any single type, will surpass the USD in common usage by 2050 or sooner? And then also, what 3 crypto moments in time would you go back to and change your level of investment? Great question. Will it surpass the USD in common usage by 2050? So first thing I think, if you're listening right now, is don't get confused. Just because it's called cryptocurrencies, not every crypto is trying to be a currency. And in fact, most are not trying to be a currency. Other than maybe Bitcoin and ETH, almost no others are actually trying to be like a new currency. Everything else is either a utility token or some sort of equity or governance token or like many other things. And so that word cryptocurrency really takes people for a loop. Most of these tokens, 99.9%, are not competing with something like USD. And in fact, when you think of crypto, if you really understand, probably the biggest use case of them all is putting USD on the blockchain in the form of a stablecoin and allowing it to move on crypto rails instead of TradFi rails, which is cheaper, faster, permissionless, et cetera. And so I think that blockchain is actually going to proliferate the US dollar globally even more than it is today, something that I don't know that the US quite understood, but maybe they're starting to wrap their head around. So I do think that will continue by 2050. I don't know that that continues. I do think we'll have something like an Ethereum or maybe a Bitcoin, could be Sol, I don't know, whatever, some sort of other way that we value things in life other than fiat currencies, like the US dollar. Fiat currencies, most people don't really realize this, is still a very new thing in our world. They're only around like 100 and something years old. So they're still kind of a test in society. But we just, because all of us grew up, using fiat, we just think that's what the world has always used and that's just normal. It's actually not. It is a failing experiment, as we all know, and it's kind of one of the reasons why crypto exists today. So yeah, that's my ramble. But by 2050, I can't imagine that we're using stablecoins. I would imagine we're using something different. What that is, who knows? I think AI is going to decide what we'll use at that point. It won't be humans deciding. What 3 crypto moments in time would you go back to and change your level of investment? That's a tough question. I would have had to think about this one a little bit further. Martin, does anything come to mind for you as I think through this one?
I have seen a lot of hype about Solana Breakpoint last year, which is a conference organized by Solana, and I believe it was in Brussels, in Europe. And I still didn't really pay attention to it. And then Solana took off, and I was like, okay, what's really happening in there? So, there are some events where if you see them constantly on your Twitter feed or elsewhere, then you should probably pay attention to it. So I wish I pay more attention to Solana Breakpoint. And this year, Solana Breakpoint take place in September. So I'm really excited about it. And I am definitely gonna watch all the presentations on Solana in there. And especially I'm excited about Fire Dancer on Solana, which is gonna be the best performant client on Solana. So yeah, very excited about updates.
Thankfully, I got Solana around $20 and $30 and actually put a call out to our community back then. So we nailed that one. However, we wrote a report, and the day that we wrote the report, Solana was at $8. And we said Solana is likely to come back and not be dead, even though everyone was calling it. And I didn't buy any. I had some still from the previous cycle, but I didn't buy any new at that time. And if I would have done that, it would have been the greatest investment of my life. I still got it at $20 and $30. So I'm still very, very happy, obviously. But that would have been one. I wish I would have switched some stuff over there. I guess when macro changed last cycle, there wasn't. Now it's pretty well known that macro and crypto are very much the same thing. And macro, whatever happened, it's in macro very much changes the dynamics of what's happening in crypto. And I don't think that was as well known in the early stages of last crypto cycle. And so if I understood it like I do now, I would have been able to time the top a lot better, which is why I feel confident we can do it this time. It's why we have those indicators on Tuesdays. I didn't do that last cycle because I just didn't quite understand how much interest rates and global liquidity was going to matter for crypto. You'll realize this cycle, when you get into the top of a cycle, if any of you were here last cycle as well, it's a very euphoric time. Everything's going up. Your net worth is going up like crazy. You don't get this in like the normal stock market or really any other market. And everyone starts to go and think, super cycle's here. This stuff's going to change the world. And we just think it's all going to happen today. And like, you just can't even fathom it going down again. Everyone's mindset is like that. And I wish I saw that in that moment, but I didn't pull myself out like I write about now and tell people to do now. I didn't quite understand at the time, but I know that that's going to happen again because this does always happen, and not just in crypto, but in any sort of big hype cycle. And so I wish I would have changed my investments when I noticed like, okay, this is getting insane. We've got NFTs selling for millions of dollars and cryptos on Saturday Night Live and whatever. In hindsight, it was quite obvious that that sentiment was getting too crazy and it was time to start getting out. And I did not do that. The other one is DGen. I knew DGen was going to do really, really well. When Base launched, I think. And I called it out in Discord too, and I never bought any, and it did like a 20x in like 5. And so that one pissed me off, but it is what it is. Okay, next question is what is the best path? What is the best path for retail investors to participate in Ethena in the US? Martin did a really, really good pro report on Ethena recently. Martin, you want to walk through the ways that someone can capitalize on Ethena?
Yeah, I'm just not sure how does it affect if you are US kind of citizen or not.
Right. I don't think there's any difference. So I think your strategy works anywhere.
Yeah. Well, on the other side, some projects just disable people with US IP addresses. So, you might use VPN or something. But yeah, Ethena, they basically provide liquid token, which represents the strategy they are using. So it's called USDE, which is a stable coin with kind of embedded yield. So you can capitalize on it by either getting exposure to Ethena because you think that they have good business and they can make a good money, or you can just use their product, which is this stablecoin with very high yield. Right now it's about 38% or something. And I believe that this yield is sustainable for the next 12, 18 months. So, getting 30-40% on a stable coin, it's pretty good. So yeah, it depends how you want to kind of use it. Either as an investor into Ethena, I think Ethena is a interesting project, and if crypto market cap is growing, then Ethena revenue is growing as well, because they will be just able to sell kind of more stable coins to the users, because the yield they are able to generate using their strategy, it's unparalleled in crypto. So the demand for their stablecoin is going to be there, and it's going to be just growing.
Now, you said earlier you wouldn't be holding any stablecoins right now. So do you think that 30% yield from Ethena is worth it, or would you not hold the stablecoin and just hold ENA instead?
Well, but if someone needs some money to take off like in 3 or 6 months, you don't want to get exposure to something volatile, because then you might need to withdraw your money and you will lose, 20%. So, if that's the case, then like having Ethena with such a high yield, yeah, it's like no brainer.
Right. And actually, low-key Lurd 11 just said, only problem with USDE is the fees on Ethereum network. I just saw today that Ethena launched on Blast this morning. And so now you can use a layer 2. It costs you next to nothing. So that's really cool. Hopefully, I don't know if they're going to go across more layer 2s yet, but they are live on Blast now. Yes, it is beautiful.
There are also rumors that they are looking on to Solana. So I would be very happy if they are on Solana. Yeah.
That would be huge. That would be very interesting. For the question that just came in from Sean, want to dive into Sol liquid staking today? Is there a good 101? Check out our pro report. It came out, was it last week's pro report, Martin? But that is probably more than a 101, but there's a lot of details. There shows you how to capitalize on it. It has the links to the right places. I would check that one out. Is there something else you want to add, Martin?
Probably not. Yeah.
Cool. This one says, this is from Chris. Hi, Milk Road team. I was wondering if you had a daily routine to learn about crypto, respectively evaluate projects. If you had 1 hour a day, how would you spend it? Naturally, reading the Milk Road newsletter is a prerequisite. Like that. Cheers from Germany. Daily routine. I mean, thankfully at Milk Road, our team has a daily 1 hour meeting where it's called the newsroom, and we talk about all the news that's happening. So that's where I get my news from. I would say the best thing you can do is be on Twitter and follow a bunch of like people that are very active in Twitter. And you can spend 5-10 minutes a day just kind of scrolling and keeping an eye on what these guys are talking about. And that'll at least show you like what the narratives are, what the like new things that are happening. That's where we get most of our stuff from that goes in our newsletter, et cetera. It's all happening on X. So I would say like, if you want to keep your pulse on the space, that's the first place to do it. And then if you want to evaluate projects, I don't know, it depends on your lifestyle. Like I like to listen to podcasts when I can. And so I listen to, obviously Milk Road Daily is one. And then Empire, which is a Blockworks podcast, I listen to a lot. So those are things that I'll do. And then reading newsletters. I think those are the best ways to do it right now, unless you're going to like evaluate projects yourself, which obviously we do. But that means you got to get on chain and you got to do some research. And that's a lot more work than an hour a day. So if you can't do the research yourself, then you want to just find the right people to listen or read and follow on something like Twitter. Okay, market trends and economic impacts. The interest rate hikes. I haven't read this question yet, so let's hope I can answer it. The interest rate hikes are now coming into effect, a one-year lag. So we could potentially see more commercial banks going under and the US government almost bankrupt due to the debt it has. But if inflation starts to trail again, it leaves the Fed in a rough position. In this scenario, what do you think will happen? Fed cuts rates for US to not default, i.e. starting to print again, and lets inflation go wild? Great question. We've talked about this one a lot. So commercial banks is definitely commercial real estate as well is a big issue. And interest rates is one of the reasons for that. Commercial real estate, for example, is an issue because a lot of big companies own all this real estate that no one uses anymore, so they make no money on it. And so those are going to probably fail, not similar to the 2007 real estate crisis, but something similar. But I think that's going to get bailed out, and the Fed is going to print a lot of money to make sure everything's okay. Inflation, I don't worry about. I know people continue to be in this inflation camp where they think it's going to get way worse. I don't think it does. I think it continues to go down. We live in a very deflationary world with technology. As technology gets better, it means things are cheaper. And so energy is getting completely innovated on right now in terms of green energy, and it makes the cost of energy go down a lot. That makes the cost of goods go down a lot. Machines and robots and AI all make the ability to create products and services go down significantly. So costs think of like a TV when big screens first came out, I don't know, whatever it was, 20 years ago, they were like 10K. They were so expensive, and now you can get a big screen for like a few $100, right? So we live in a world where things are becoming more and more deflationary. And with AI, it's going to take it to a whole nother level because it's not just technology that is going to speed things up, but also we don't need as many humans, which is going to take costs go down even more. Now, that is more of like a years out type of thing. It's not right now, but I do think that we have enough of deflationary pressures that inflation is not going to go any higher. And I say that because just people don't have a ton of money right now. Wages are not going up. A lot of people are retiring. If you could think of demographics, a large percent of the world is going into a time in their lives where they aren't making a lot of money. And so they aren't spending a lot of money, which keeps inflation low. The reason most people think inflation is going to go higher is because the 70s, we had like a decade long of inflation that was super high. And people are kind of comparing this to that. And what people miss is that it was all demographics. The 70s had high inflation because you had whatever percent of the world that were boomers that were all starting jobs at the same time, buying houses at the same time, buying dishwashers and washing machines and like everything, and then all having kids at the same time. And so they needed to buy diapers, et cetera. And we didn't have good machines and good technology to produce all those goods. And so inflation went nuts. And it took 10 years for us to figure all that out, to get the supply back in check. We don't have those issues anymore. We don't have a big demographic entering the workforce at this point. If anything, we have the opposite. Most of the boomers are now retiring, and they don't know how long they're going to live for because they have really good medication. And so boomers are scared because they used to die like 5 years after retirement. Now they live for like 30 years after retirement because they have medications to keep them living, which means they don't have any new income coming in. They have their savings, but they don't know how long that savings is going to last for. It's a bit scary. And so boomers aren't spending much anymore. And so we don't have the same demographics as we did in the 70s. So I don't think inflation is going to be a problem at all. It might remain above 2%, which was the Fed's goal. And if it does, I don't think they'll care. I think they'll still lower interest rates and they'll print a bunch of money. And I don't think it's a big doomsday scenario like everyone thinks. If commercial banks do fail or continue to fail, then that's fine. The Fed will print more money. Bad news is good news, basically. And we've seen time and time again that anything bad that happens, the Fed just intervenes and prints a bunch of money, and that means assets go up. So there's really just no choice, but we continue to print money. Last, we're going to do one more question. I know we've just hit time. I'm going to do this last question, which is, shouldn't we be seeing a little more of retail coming into the space? I'll just answer that one real quick before we jump off. Again, we're not in the 2021 phase of the bull market yet. That's still yet to come. Last time, before retail really came in, it took Bitcoin being at like 40K. And then all of a sudden Tesla bought, a bunch of Bitcoin, put on their balance sheet. NFTs started to go nuts and things went crazy. And all of a sudden everybody was talking about crypto and NFTs. We're not there yet. Retail doesn't come in until we're way past all-time highs. And again, ETH sold not even at all-time highs. Bitcoin, it passed, but that was because of ETF. And then I don't even think it's at all-time highs right now. So we got to wait for retail. And the more we can continue to go up right now and hold these levels without retail, that is a very bullish sign because we're building a nice, strong foundation. Retail will come in when Bitcoin hits 100K. That's my guess. ETH will be already past all-time highs. So will Solana. I think that's when they come in and then things get a bit crazy. And at that point, that's when you want to think about starting to dollar cost average out. Retail is your exit liquidity. So that's kind of how it works. So we actually want retail to wait. The longer that we can wait for retail and keep building and keep, accumulating, and hopefully still the price continues to go up as institutions come in, retail will FOMO in at the end. And that is our signal to get out. Well, that's a wrap, guys. Thanks everyone for joining. The questions were fantastic this time around. Again, we're going to do this every month. So we will have another one of these in June. Look for the Pro portfolio coming out tomorrow. This is going to be awesome to give you guys kind of an insight on, what we would invest in. On Saturday, we'll have a full Pro report that explains it and walks through the whole strategy on what to do right now about this portfolio and how it will change in the future. So it should give you a good kind of overview of all this. Our hope is that it makes your lives much easier. It allows you to capitalize on the cycle. And as Martin said, it allows you to not fuck this up, which so many of us tend to do in these very opportune moments. But thanks again for joining, guys. And please share some feedback if you have any inside the Discord channels. We'd love to hear your thoughts on these. And we'll see you guys next month when we do this again. Take care, everyone.
Thanks, guys. Bye.
Thank you for listening to Milk Road Radio, the easiest path to get smarter about crypto. If you like this episode, share it and hit subscribe or follow so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, then we'll leave a link to Milk Road Pro as well, your #1 resource to help you invest successfully in crypto. One final note, this podcast is for educational purposes only, and nothing we say is financial advice. Crypto is risky, so you should never invest more than you're willing to lose. Thank you, friends, and we'll see you in the next one.